Snowflake just reported its latest earnings. And shortly after that, the stock fall. Investors were surprised by the market's reaction. So in this video, we're going to break everything down: the numbers Snowflake reported, what actually caused the sell-off, and whether this drop is reasonable or simply an overreaction. And most importantly, we'll look at whether Snowflake is a buy at today's valuation, or if investors should be more cautious going forward. Snowflake is a cloud-based data platform that helps companies store, manage, and analyze huge amounts of data. Think of it like a giant, super-fast database in the cloud that businesses can use without having to own any servers. One big advantage is that Snowflake works on all the major cloud providers: Amazon AWS, Google Cloud, and Microsoft Azure. That means customers can choose whichever cloud they want, and Snowflake still works smoothly. Snowflake makes money based on usage. Instead of paying a fixed monthly fee, customers pay for how much data they store and how much computing power they use. So when businesses analyze more data, run big reports, train AI models, or build data apps, Snowflake earns more. If they use less, they pay less. Snowflake is also growing fast in AI. Its platform lets companies build AI tools directly on top of their data, things like chatbots, automation, and intelligent data analysis. Snowflake also makes it easy for companies to securely share data with partners or other teams without copying anything. The long-term vision is simple. Snowflake wants to be the main place where a company stores its data, processes it, analyzes it, and builds AI all in one platform. That's what makes Snowflake such a big player in the new data and AI economy. Snowflake reported a very strong quarter for Q3 fiscal year 2026. Product revenue came in at $1.16 billion, growing 29% year-over-year. Remaining performance obligations accelerated to $7.88 billion, up 37% year-over-year, showing strong future demand. Net revenue retention stayed extremely healthy at 125%. Snowflake also added a record 615 new customers, bringing its total to more than 12,600, and signed 4 massive 9-figure deals, the strongest large deal activity in its history. One of the biggest highlights of the quarter is that Snowflake hit a $100 million annualized AI revenue run rate 1 quarter earlier than expected. More than 7,300 customers are now using Snowflake's AI features every week, and Snowflake Intelligence is the fastest adopted product in company history, already reaching over 1,200 customers. Management said AI influenced about half of all bookings this quarter, which shows how deeply AI is becoming connected to Snowflake's entire business. Snowflake shared examples like Morgan Stanley, naming the company its strategic partner of the year, Fanatics, using Snowflake Intelligence to unify billions of customer data points across merchandise, collectibles, and gaming, and TS. Imagine using Snowflake to automate work equal to 8.5 full-time employees. Snowflake said customers increasingly see the platform as the foundation of their AI strategy. And importantly, AI is not replacing the data platform, it is strengthening it by increasing usage, consumption, and customer stickiness. Financial performance remains strong across the board. Product gross margin was 75.9%. Operating margin expanded to 11%, up more than 450 basis points from last year. Free cash flow margin was also 11%. Snowflake ended the quarter with over $4.4 billion in cash and bought back 1 million shares for $233 million. Management emphasized that the core business remains very stable. Financial services and technology customers led growth, and Snowflake now has 776 Global 2000 customers spending an average of $2.3 million each over the last year. Many of these companies are still in the early stages of their data and AI transformation, leaving significant room for continued expansion. The company also highlighted strong momentum across its ecosystem, announcing new partnerships with SAP, Palantir, Splunk, Workday, UiPath, and an expanded partnership with Anthropic that brings their AI models directly into Snowflake. Snowflake also surpassed $2 billion in sales through the AWS Marketplace and received 14 AWS Partner Awards, more than any other software vendor. For Q4, Snowflake guided to between $1.195 and $1.2 billion in product revenue, representing 27% growth. The company kept its full-year margin targets unchanged, including 75% product gross margin, 9% operating margin, and 25% free cash flow margin. Management reiterated that AI is accelerating customer expansion, creating new workloads, and speeding up migrations from legacy systems. Snowflake believes it is positioned right at the center of the enterprise AI revolution. So why did the stock drop after earnings? Even though the results were strong, investors had extremely high expectations. Revenue growth did not accelerate as much as the market hoped. Q4 guidance was solid but not a major surprise, and the stock had already surged significantly before earnings. Some investors also worried that AI revenue, while growing fast, still represents a small percentage of total revenue today. Because of this, the market sold off the stock, despite strong underlying business performance. Even though Snowflake reported an impressive quarter and its core business looks very strong, the stock is still trading at valuation levels that are too high for my personal investing standards. Yes, if Snowflake can maintain this kind of growth for years, the stock might justify its premium price and potentially be a buy. But for me, this type of high-flying, richly valued stock simply does not fit my strategy. Especially in the economic uncertainty we're living through right now, holding overvalued growth stocks can add unnecessary risk to a portfolio. Great company, great results, but at this valuation, it's just not a stock I would personally own. Thank you for watching. If you enjoyed this breakdown, make sure to like the video, subscribe for more AI-powered financial content, and let me know in the comments whether you think Snowflake will live up to its high expectations. I'll see you in the next one.